In this video, I want to talk about the bank statement loan, which is different than regular traditional mortgage. And I just basically took a class and I could actually see myself using this product when my tax return is kind of weak to show my purchasing power. And I could see where like business owners, we have a lot of like Korean restaurant owners in town. I could actually see them using it because they have very complex tax returns or income verification. And I could see, any kind of business owners who are not W-2, they're all 1099. When your income doesn't show your income strength that well because you have high expense, but you have very consistent income, but not so much of the taxable income that regular banks are looking for in traditional mortgage, which is called a QM, which is, I believe, called a qualified mortgage. But in today's video, I'll share what I learned from this class that I took. It's called the non-QM loans, which means non-qualified mortgages, QM. Qualified mortgages. So yeah, it's called the bank statement loan. One is called the DSCR loan, which is debt service coverage ratio, but this is more only for the investment property. I want to focus in on the bank statement loan, which you can use to buy your primary, second home or investment, as far as I understand. Welcome back to my channel. This is Shawn, the Realtor guy from Portland, Oregon. And thanks for joining me. Obviously, I just learned this, so I'm just like trying to figure out a way to help more clients of mine, and including myself, because realtors, we have very, sort of like cyclical income. Some months we make some money, other months we don't make any money. So if you're in this situation, maybe this could benefit. So ultimately, if you don't qualify for a mortgage in traditional way, like credit union, they look for the 2-year tax returns and things like that, and they say you don't qualify for mortgage. If you hear that, you might want to look into this. Now, some of those things, they basically coach the realtor, me, what we should look for. So if somebody says, so if you fall into any of these, this could actually work for you maybe. If you think that, I'll just read it. I don't show much income on paper. My accountant says I can't get a mortgage. I want to buy in my LLC. I want to and start investing in real estate. I already have tenants lined up. That's kind of odd one, but okay. Maybe your relatives or your roommate, your college roommate. I was declined by my bank or credit union. So if you're in this situation, but you own a business, and you're still getting decent income, but your expense is so high that your income doesn't show that well, this program could be that you could use. It covers up to, I believe, $2.5 million, I think. Let me just double check. Oh no, I'm sorry, $2.1 million as of now with this lender. So let me kind of go over some key points so you can learn about it, which I learned today. By the way, I'm not a mortgage officer, so this is not my strength. This is not my expertise. I can connect you to the expert who can look into this and give you the definitive answer. I'm just here to deliver the message from these mortgage officers. Just let me know if you want the connection. I know a good mortgage officer. She's really good person too, in my opinion. So common bank, so here we go. Here we go. So common bank statement scenario, self-employed borrowers not eligible for conventional financing, typically due to high expenses, as I mentioned. complex income borrowers looking for a less time-consuming lending process. What it means is that when the lender asks you for the P&L for the last like 10 months or so, or like you have multiple businesses that you have to tap into like each business report, and then that's very cumbersome because a lot of businesses are very complex. And so you want to skip all of that sort of tedious data gathering session. You can just show just simple income statement from your bank account. That's why I think they call it bank statement loans. Business owners with increasing revenue not yet reported on taxes and they gave the realtors example. Let's say I didn't close a lot in the last 2 years, but I'm going to close a lot, or I've already closed a lot this year. This year's income is not going to be reflected until I've filed the tax next year, right? So theoretically speaking, if I want to use a QM loan, the traditional loan, I have to wait until next year to make the move if I want to buy a house, because I have to file the tax, and then the traditional bank will use that tax return as a base for my mortgage approval. But in this case, you can sort of like shrink that, make it happen much faster, much sooner than next year. The success story, here are some real clients example. Declined by credit union for second home, but they purchased for $2.1 million, and it was a beach home. So yeah, if you're looking for a beach home but your credit union says no, this could be one option, I suppose. Owned a logging company and had a $250,000 loss on the business return with no other income. And 12 months bank statement analysis with a 50% expense ratio resulted in over $300,000 per month in income. The presenter gave this example. If you look at that, the business return, it shows the loss, but when he averaged it out, the income actually surpassed that tax return. So he was able to qualify. I think he bought investment property or something like that. That's what he said. Despite most recent years' returns showing positive income, the client had used the bank statement program on 2 additional transactions due to simplicity. So, like really, like getting a lot of documents, collecting every expense report, putting things. And when you own multiple businesses, I own one business, and sometimes it's confusing. It's kind of tedious. I don't know where to get that information unless I talk to CPA. And so if you have multiple businesses, this loan will make it really simplified. So here's a bank statement versus DSCR. Again, DSCR is a debt service coverage ratio loan, which is only for the investment. But it is like they call it, both are called portfolio loans, which means if they find an investor who would take this loan with this risk and the payment structure, so this doesn't go through like Fannie Mae, Freddie Mac type of government entities. Are they government? They're private, but they're government initiated or backed by government. So the big difference here, where did I go? I lost it, sorry. Did I lose it? Yes, I found it. So the difference is the bank statement loan qualifies using borrower's income and liability analysis. They call it the DTI, debt to income ratio. Uses the bank statement cash flow to determine income. Bank statement, not tax return, but bank statement. It's best for self-employed borrowers buying primary or second home. They didn't talk about investment, so what I said initially is wrong. So this is mainly for primary or second home. The DSCR loan is good for, the difference is qualifies using property cash flow, no personal income needed, no DTI requirement, best for purchasing an investment property. So here's some benefits for realtors. It says faster closing due to fewer documentation requirements, approve more clients, especially those self-employed, don't need to wait for tax filings to be purchase ready, increased purchasing power, quick income certification during pre-approvals, support to repeat clients buying multiple properties. So some of those. Now, one thing that I want to talk about here is that this is different than no doc loan, which came up during like 2008 financial crash. I forget what they call it's called a statement loan, stated loan. What I'm trying to say is back then you didn't have to even show your bank statement. Stated loan, I think that's what it's called. Some call it the subprime loan and things like that. But what it means is that back then you didn't have to show any documentation of your income or tax. But in this case, they call it the bank statement loan because you still have to provide your bank statement. And if you have like a lot of non-sufficient fund and NSFs, they don't qualify you because that proves that you may not, manage your money that well or balance your bank account that well. And yeah, I mean, it goes up to 2.1 million. Let me go over some of the key points here. 2.1, and then let's see. Yeah, so I mean, that's what I learned today. I mean, I think I covered most of it. I think ultimately it gives you more opportunity to be able to buy a property. Obviously, when you're denied by the bank, like traditional mortgage, you can't do anything. But with this option, you may be able to buy something. And this is different than like, let's try that subprime all over again talk here. It's more of a giving slightly different option. And I believe the interest rate is higher than traditional. One of the attendees gave the example. It was somewhere like 6.7%, which I actually guessed. 6.7% for one of these loans, while the primary QM loans are going for about 6%, maybe 5 and 5.8% right now. So rate is higher. However, it gives you that additional qualification option, which then gives you one more opportunity to be able to buy a property. One thing that I want to quickly touch on is this DSCR loan. So this is kind of cool in the sense that, for investors, which I don't want to talk a lot about, but you don't have to really have an income as long as you have like down payment, 15 to 20% minimum down payment, and you found a investment property that cash flows, you can buy that one without having an income as long as you fit these categories. So just to wrap this up, I mean, the bank statement loan, I didn't know much about it actually. I always thought that this kind of loans are really, really dangerous. Kind of like going back to the subprime loan era is going to push toward like housing market crash. So that was what I was thinking when I didn't know anything about it, because these are not typical loans that I see with regular home buyers. But I guess when I work with more of business owners or high net worth individuals, I may see this because I could see it. If you own like 10 businesses and you make a lot of money in the bank statement, but high expense, so your tax doesn't show that well, you can still buy up to DSCR up to 2.5 million, the bank statement up to $2.1 million house. So I could see it happening and I'd like to see it. So That's what I want to share in this video. If you have any questions, feel free to let me know. I'll be happy to connect you to the local lender here who are specializing in these two loans, and just to give you more options. So thanks for watching, and I'll see you in the next video.